Hi friends, welcome to the weekend review of the market for the week ending on the 27th May. Last week we did see that there was indeed an attempt to make a bottom. We did make a higher low technically. This week started off on a weak note. As you can see, the index opened above the previous close and tried to move up into the safe territory of 16,410, but the supply came in to push it down and it opened near the low, and the volume was also just above average. The following 2 days we saw weakness persist, and the both days we had a closing near the lows, and the volume was also quite low, and the spreads were quite small, indicating that the weakness was not very profound. It was more of moderate weakness coming in. But on Thursday, we saw the index open above or gap up above the previous close. But the supply came in and pushed it down a lot, but it smartly recovered and opened and closed near the high. And the long tail does indicate good amount of buying has come in, and the volume was also above average, indicating that the buying interest was substantial or increased a lot. But on Friday, we had a gap up opening, and the index could not make much headway, and it still closed below the 16,410 level, and the spread was very small, and the volume was about average. This does indicate that the buying was not substantial, neither the selling was substantial, but there was indeed a good amount of tussle between the buying and selling. So the index remained just below the 16,410 level, which is very crucial. We need to move above this level. Let's quickly look at what happened to the overall market. This is the overall market volume, as you can see, and the buying and selling pressure of the overall market. The overall market, excluding the ETFs and the indices. As you can see, the volume has been always quite low. Only on Thursday, we saw an increased volume, but still it is less than the average. And here you can see a change. On Wednesday, we had the sell volumes were 3 times the buy volumes, and the decline to advance ratio was more than 5 times. But on Thursday, the sentiment changed, and we see that the buy volumes were about 2.7 times the sell volumes, and the advances were more than the declines. And on Friday, more stocks moved up, as indicated by the advance decline ratio. It was about 2.5 times, and the buy volumes was 3 times the sell volume, more than 3 times the sell volume. So indicating some buying interest coming in here. So overall, we should see a quick bounce from this level. Now it's difficult to predict how much it may move up, but we could see a relief rally or a quick bounce here. The bounce could be quite quick, as we have seen in the last 2 or 3 bounces were quite sharp, and the declines were slow and grinding. So the coming week we can expect the good bounce, and some other stocks could move up a lot. So we are expecting a positive week in the coming week unless some untoward incidents or news comes in pushing the market back into the previous support zone. Let us now look at how different sectors fared last week. As you can see here, IT did not do well, energy slipping into red. So the sectors which did well were the auto, financial services, banking, and MNCs. Services were slightly trying to go into the green, but most of the other sectors were slipping into red. Now, if you look at different sectoral charts, let's look at IT sector. Obviously, it has been going down all the way for quite some time, and it's below the 200, 150, all moving averages. It's below that. And of course, Friday you could see some bounce, but overall trend is down. And the bank nifty, as you can see, for the last 2 weeks, it has been doing quite well. And it is moving above the short-term moving averages. It just moved above the 50 moving average. So the bank nifty is showing some strength here. Similarly, you can see that financial services also showing some strength here. The last 2 weeks, it has been trying to move up, trying to make a higher low, and now trying to make a higher high. So these are the strong sectors, and you can expect them to move in the coming week as well. And another sector which has been uh, quite strong from last 2 months has been the auto sector. Now it's already made a higher low, and now it's attempting to make an higher high. So this has been a strong sector in the recent past. Pharma has been down. It did try to do some well, but again it failed and it has come back to the original low levels. Let's see how it performs in the coming week. Metal has been doing badly for quite some time. Energy was one of the strong sectors. It was moving out, but now it has lost steam and is now it has not made a lower low yet here, and but it is a weak sector. So these are the overview about different sectoral charts. Now let's quickly look into some of the strong stocks. The first one on our radar is Sharda Crop Chem. It made a good move in February, then consolidated, again a good move up in the beginning of April, end of March, then a shallow retracement till the 50 DMA. Then again it started moving up and now attempting to take out the previous rejection zone. And the first attempt was on the 24th. As you can see, it was a widespread prior. But as you can see, supply overwhelmed the demand here. And the bar closed in the upper middle portion. The volume was also very high. The high volume and the long wick does indicate that the supply was overwhelming. So as a result, The next bar you can see again a wide spread bar, but the close is not at the low, it is slightly above, indicating some buying did come towards the bottom here. And on the 26th, you can see the bar opened and the supply pushed it down below, and the demand quickly came in and pushed it up back, and it closed near the open. So the long wick and the increased supply does indicate that the supply has been overwhelmed or the supply has been absorbed. Now the stock is ready to move up. As a result, the next bar you can see it opened above the previous close, and right from the word go it started moving up and ended up closing near the high, and the volume has also increased. Now we can see that there has been a lot of interested buying coming here the last 10 to 12 sessions, indicating that some long-term buyers are coming in here, or at least people with a longer term view are coming here expecting the prices to move up. So all this add up to say that the stock could make another attempt to take out the price rejection zone and move up. So once it's close above 770, we can expect the stock to move up much further. Next stock we are going to look at is Raymond. This has been another stock which has stayed quite strong during this current market weakness. In April, or the beginning of April, it moved beyond the price rejection zone and crossed this 819 levels and started moving up. But it faced some rejection in this area of 919 to 963. Then it came down. There was a shallow retracement till the 100 DMA, and it again started moving up. As it approached the price rejection zone, you can see these two bars had long wicks. And in this bar, you had also increased supply or the volume, which clearly indicates that a lot of supply is present. So this attempt was sort of given up, and the next bar we can see a widespread down bar closing near the low. But if you see, the volume was quite low. That means the small supply could move the prices down a lot. But this bar, as you can see, it opened above the previous close. Supply came in, pushed it down, but the demand could easily take up the price back, and it closed on the upper side of the bar. But the volume was still low, and indicating that supply sort of stepped back, and it was not interested to push the price down. Again, the next bar, if you can see that the open was above the previous close and it started moving up into the price rejection zone, and the supply came in and pushed it down, and it closed at the edge of the rejection zone. Supply is still present, that means. You can also see that there was some interested buying, or the longer term buyers were coming in at these different levels. But since the supply is still present, we expect the stock to retrace a little, or at least stall around this level till all the supply is absorbed, then to move up. The stock still looks strong, only it's a matter of time before the supply is absorbed and the price is pushed beyond this 963 levels, and it'll move up further. So it is a stock worth to be in your watch list. The last one for the day is HDFC Life. This is one stock where long-term investors could have a look at. As you can see, the stock has been going down from last September. It has been on a downtrend, and in this year it made a big down move. And in March it started recovering, and as you can see that it has been making higher highs, higher lows like this, and then a small consolidation here, and a clear spring is happening here, or a shakeout happening here, and then the stock is moving out. Now it has come out of this small consolidation area, and you can see the volume is also increasing here. And if you look at the relative strength has been going up, and currently it is moving up further, and the strength of the stock is also moving up. So this looks to move up much further, and could be a long-term bet. Of course, it is better to wait till we take out the 200 DMA as well. Of course, the aggressive ones can take small positions here, and it could be a long-term bet, as the sector itself looks to do well in the coming months. The insurance sector itself is likely to do well in the coming months. So I will stop the session here because I don't want to make the video long, and maybe I will do another video on the stronger stocks. Right now, I hope you enjoyed the information given in this video, and feel free to ask for any doubts, clarifications. Thank you very much.